Welcome to ECNTRADE daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar bulls at this stage are not budging since the break above 69 cents. We've seen, at least going into the fifth consecutive day, that the market has remained somewhat bullish. However, it would also be assessed that every time the market takes a challenge to the upside, it is quickly returned by supply. And what I mean by that is that the overnight challenge to the top side around 69.5 was quickly in retreat. But we're not breaking underneath 69 cents. I feel from this pattern that the market should continue to remain underneath this trend, which has been broken, but needs a little bit more confirmation. That confirmation will be a break of 68 cents, which is somewhat away. But the immediate support is seen at 68.75, and if we see that break, then I expect to see a tumble. As you can see from the technical implications, the MACD is still not supporting this market to any kind of sustained rally, and therefore towards 69.5 to about 69.75, the market should find the bears prepared for an ambush, and therefore look back towards the downside. Well, the stab to the upside still found good resistance around 112.80. And the dollar index still remains capped at 97.70. The market was prepared for the challenge to either side of those ranges, as I spoke about just then, and the release of the US job numbers was a little bit surprising as it shattered expectations as the US payrolls jumped by 4.8 million in June, according to the US Labor Department. It was the second month, that is, of gains after a loss of more than 20 million in April. Now, as the US continues to slowly reopen from the COVID-19, the economists had been holding a forecast around 3.7 million. As I mentioned, the market coming at 4.8, which is quite a strong number. And the jobless number dropped from 12.4 to 11.1, considering we saw a peak back in April of 14.7. Now, from the technical aspect, I'm still holding any advances towards that top side of 113 as a potential supply zone, and I do anticipate that we'll see further risks to the downside. Now, a break of 111.80 would give further supply towards the market of 111.10.15 and reassess from this support level where I've ascertained here. We've got a MACD that is negative, and also the fact is the RSI is broken back for the midway point. That does support my case that the fact is that stab at the upside, the market wasn't going that way very convincingly, and the fact I'm looking for a down play. But the markets might be a little bit subdued due to the fact is that the US is closed in observance for Independence Day. But nevertheless, there is still a bit of price activity at the moment, and that is looking at dollar yen since the rejection of 107.90, that is, and the resistance around 108.15, where the peak was, is that the bears are still likely to come in bigger numbers. And if so, then I'm looking down towards 107.15 and lower to 106 figure 15. And that was the recent rejection area, as you can see from the previous history point of the support. So therefore the market should tumble, and I do like the way these technicals are set up for that move. I called on Tuesday the bullish divergence. Since the bullish divergence, we've got a gravestone placed after the market took a challenge to the upside and rejected. Now, to support that gravestone, we need to see a break under 124.25. If we see that break, that confirms the market for a target of 123 figure. So keep an eye on that if you are looking for a trade, because it would negate the bullish divergence that was seen 3 days ago. And therefore, the fact is this gravestone is quite a negative candle, but we need confirmation, and 124.25 could be just that. Dollar CAD going nowhere and still sideways at present, and the fact is that the market still seems to be finding support at this stage of 135.35. I do anticipate that if oil does break down, which I'm starting to question if it will, because it's taking so long, but nevertheless, if it breaks 135.35, then it will give a further weaker play for dollar CAD to 134.80. But while for 135.35 is intact, let's see if we can break back up towards the 136 region. Now, looking at the pattern for gold, is that since we had on the dailies the rejection from the 4-year highs around 1,788, The call was to confirm this bearish outside range day close under 60. Well, we've stabbed there twice and no follow through in the close, both being a hammer and a dragonfly doji. So the market doesn't want to go down, but the technicals are in play for that move. I'm still holding the fact that since the upside challenge, respecting the resistant level of 1,788, that I'm looking for a further down play, and therefore a close of New York, or tomorrow morning at 7 o'clock, is at under 60 would give further confirmation to the downside, and look towards the region somewhere of 1,736 to about 46. As I mentioned, there's no pullback in oil, and the fact is the market still seems to be somewhat subdued in falling back. Now we see a break above 41.5 that would give further aspect to the target of $43 to $46 a barrel. But the cap at 41 has been holding very well, so let's see how it continues to play out. Well, that's a wrap for this week. Thank you very much for joining me, and please look out for the intraday report. I hope you enjoyed a great start to the day and to this weekend.